Hello everyone and welcome to another real estate video. This is Javier Vidana, the real estate YouTube guy here in Phoenix, Arizona, helping you accomplish your home goals. So today's video is going to be about USDA loans. So I've been getting this request for this video for a while now, and most responses I give people is, listen, I just don't do USDA loans that much in my part of town. I don't feel comfortable giving a video about that. But as this channel continues to grow and it's becoming more part of people's home journeys, I really want to make sure that, instead of you going in Google and finding wrong information, I want to be at least some source to get you started on your journey. So instead of me coming from this point of I know already what I'm talking about, so I'm telling you just what I know. So what I did is I researched this topic heavily. I called a bunch of people I know, lenders, agents that have done a lot of USDA loans. I did a deep dive online and heavily researched the topic for you guys. So essentially, the USDA loans does in fact come from the same government program that you're probably familiar with, the food one, right? So I was very surprised to find this out. This government program is responsible for developing and executing laws related to farming, forest, foods, all kinds of things that at least I associated USDA with. But one thing that I found interesting in my research are the following. They promote agricultural trade and production to assure food safety, to end hunger in the United States, and this last one is the crucial one that I think relates to these kind of loans, to foster rural communities. So essentially, they dip their toes into real estate because they want to provide affordable home ownership opportunities to promote prosperity, which in turn creates thriving communities and improves lives in rural areas. They believe by improving these rural areas that are largely based on agricultural and farming and all that stuff. I'm sorry, I'm not too experienced with that ranching stuff. They believe by expanding these areas and making them more robust, that in turn helps that community and hopefully helps the quality and the quantity of the foods being produced. One thing I want to make sure you guys have a clear distinction on is the difference between this program and a first-time homebuyer down payment assistance program. A first-time homebuyer down payment assistance program is still having a down payment in play. So if you buy a house for $200,000, there's still a down payment there. Now, it might not be coming from you, but there might be a down payment coming from the government or from some other kind of entity. So if you're buying a house for $200,000, the down payment's, $7,000, well, the loan amount is going to be $193,000. So even though the $7,000 didn't come from you, it's coming from somewhere else. So the loan amount is actually closer to $193,000, not the value of the house you're buying it in. You're buying the house with an instant $7,000 of equity because that's the down payment that was put in. With USDA, this is 100% financing. So if you're buying a house for $200,000, the loan amount will be at $200,000, if not a little more, because of fees. So the only equity you're going to be building from this house is going to be the market going up, or any kind of renovations you do to the property, or maybe specific neighborhood, maybe the area gets more populated, or who knows what. As opposed to the other route, first-time homebuyer assistance program, there's still down payment there, so the equity is going to be building off your initial down payment that you put down. So once again, first-time homebuyer down payment assistance program, the loan amount would be $193,000 or closer to $193,000, whereas USDA, same house, the loan amount's going to be $200,000. Now that we know that, let's continue. So in brass tacks, there's two ways you can get a USDA product for your home. The first way is to do a direct loan from USDA. Now, these are more for the lower to moderate income folks, and in my experience, most times people talk about USDA product is in referring to this direct route. The other route is a guarantee, which is when another bank funds and originates the loan. However, it's not USDA doing all the work; they're just guaranteeing it. And this is, from my experience, for more higher income, or at least what I've researched in my research. So in this case, most people talk about the direct route. If you're more experienced in the guarantee route, I'd love to email and talk to you a little further so I can make another video about it. But for now, we're going to talk directly about this. Regardless of what route you take, though, I want to make sure to give you this asset. The number one thing you should be doing before you go talk to a lender, before you go talk to an agent, is checking out the USDA Eligibility site. I'm going to link it below. I'm going to have a big old thing here, but you're probably going to not want to type it out. So one of the first links I'll leave below is this website. In this site, you'll be able to see the direct route and the guarantee route. In this case, we're going to talk about the direct route, and you're going to be able to see the income limits, the eligibility for properties, what areas, and all that good stuff. So in this case, we're going to talk about the income. Now, every county is different. Is that you guys? I get a new surprise today. Hi, Mama. You're going to play here? Okay. I just got a surprise for my family. What? That's yours?
Say hi on Daddy's camera. Go say cheese.
Go say cheese. No, okay. I'd assume they use the average income of the area. I don't want to get to the specifics of how they determine the income eligibility. However, you want to make sure to reference it, look up your county. And when I looked at the site, I clicked the link and they showed me a PDF. You know, that's where you want to find your city/county and see what the income limits are. Now, it's really important to note that there's not just a standard income limit. It's based off your family size or the people living in the house. So if you have 1 or 2 people living with you, then it's going to be on the lower side. You know, it might be 20, 30, 40,000 a year. Now, if you have 8 people or 10 people living in your house, then that's going to grow substantially. So please try to be accurate and don't just look at the number, account for how many people are going to be living with you. And probably the most crucial part about this is where you're able to determine what areas qualify for a USDA product. Like I said before, they're meant for rural areas. So you're not going to be able to get a USDA loan in a big metro city. You're not going to be, in downtown buying USDA loan. It's meant specifically for rural areas. I'm sure there's specifics of the population size and whatnot. Honestly, the best way for you to verify it is to find a property address that's kind of in the similar area, or go to this website, click the property address, and it'll automatically show you if it's available or not. I also was able to find a map where it specifically says what areas qualify for it, what areas do not. And in my case, in my city, it's very clear. Anything with a lot of people living in it, no chance. The further ones out, which are usually the areas that you're driving by when not like going to Disneyland or something, those are the areas that do qualify for USDA. One thing I noted in my research is some areas, some cities, you'd be surprised by what's considered USDA eligible. For example, in 2010, I told you about Buckeye. I didn't really consider that area rural, but for some reason during that time it was. Now you might have a Buckeye in your city still that's not too far away, but would able to qualify USDA. So this is a good tool, a good website where you need to find out what cities actually qualify for. Maybe a family member of yours bought in a certain city with USDA, and don't just take their word for it. Go and verify on this website. So in summary of what I just said, use this website to determine the income limits and the eligibility of what area you would be able to do a USDA loan. After doing this, you probably want to know what are the basics of this program. Now, I don't know if it's different in every area. I don't know if it's different for every lender. So this is just what I was able to research. Please use this as a starting point and don't take my word as law. It's only for single family homes. You can't buy a property that's also an agricultural farm or anything like that. If you're going to get a manufactured home, it has to be either a new one or a new-ish one. Please verify on that one. But you can't use this property, like I was saying, to buy a house with 2 acres of agricultural farming next to it. Now, you can buy a single family that has land, I think, but you won't be able to buy a farm or something commercial-esque. I'm sure there are other products that are able to go USDA or other routes, but that's something for you and a lender to discuss. Now, here's a key distinction. It's not a first-time homebuyer program, but they don't like you owning any other property anywhere else, because they don't want people to come and take advantage and just be buying houses with 0 down, right? So if you've had a home in the past and you don't have it anymore, that might work. If you sold something, that might work, but it's not meant for just first-time home buyers. If you don't have a house now, or maybe there's certain situations like you have a house and have it rented out, or you just moved out of state, it might work. Talk to your lender to verify. Credit that I saw is like from 620 and around that range and up. I believe you are able to qualify, but the debt to income ratios are going to be a lot tighter. And if you don't know what that is, watch my other videos where I discuss this. And if you're in the higher credit bracket, like in the 700s and up, then your debt to income ratio can be a little more loose, but not by much. It's like 45%. So I really wanted to verify with a lender if that really helps your interest rate or not. But with government programs, interest rates are all the same across the board. I'm not sure if a higher credit will be able to deduct that interest or not. And that's it, guys. That's all I was able to kind of digest, and hopefully this video helps you at least initiate everything. One big recommendation I'm going to give you from the get-go is don't just go on that website and just, if you see it doesn't work for you, just give up. If you have an area that you already like, or you have a house in mind, then continue it, pursue it, talk to a lender. My thing is if you want to do USDA, talk to a lender. Don't just discourage yourself from what you see on the website. If there's an area you like and it's qualifying for USDA, and you seem like you kind of have the general sense or the everything into play, then pursue it. Don't give up. Regardless if it's USDA or down payment assistance, these are usual topics that get people started in buying a house. So don't be discouraged and start, continue this thread and see where this takes you. And that's all the time we have for today, guys. Thank you so much for watching. I appreciate your time. If you like this video and you're interested in weekly real estate educational content, I would appreciate a like and a subscription. And if you happen to have a friend or family member who might benefit from this info, you can always share the video with them. I would love if you guys do that. Also, if you guys want to get in contact with me, you guys know the drill. Comment below, go to my Instagram, DM me there, or my contact information can be found in the description, where you can either go to my website, email me, you can call me directly, all that good stuff. So thank you guys so much again. I appreciate your time, and I hope you guys have a wonderful, wonderful